The value of the deal was, wait for it, $300 billion with the pinky right there.
OpenAI is going to make $12 billion in revenue this year. Not earnings, revenue. And they've just promised to spend $300 billion over 5 years on compute, which, if my kindergarten math is correct, is $60 billion a year, which is 5x their revenue today. We should short Oracle stock on this news because this revenue won't happen for them.
What do y'all think? Is there an AI bubble?
Of course it's a bubble. Of course
Yes,
it's a bubble.
bubble with a B. Welcome back to 6040, the only podcast that deep dives Asia's tech and business headlines with the leaders actually driving the change. I'm Maria, and I am in studio, flanked by Prashanth and Peter. And online, we have Alexi. Hey, Alexi.
Hi, guys.
Hello.
All right. We got a big episode today and not that much time, so let's jump in. Today, we are going to be diving into some big moves that's happening in the AI and market space. There have been some big compute deals. We're going to be talking about what's happening in Europe, whether or not there's an AI bubble, and then wrapping up with some stuff here in Southeast Asia. So let's get going on AI headlines. Tons going on here.
Just a bit.
And a lot of them involving OpenAI, at least two of our topics here. So let's start with the bigger one, OpenAI and the Oracle deal. So OpenAI has just locked in a monster compute deal with Oracle. Let's get started in terms of hearing what y'all think about like what this means and what this signals for OpenAI's sense of the future. Peter, you want to kick off?
Yeah, I'll kick off. I think we should tell listeners what it is. Not everybody might know
Fair
the
enough.
details.
Sorry. Go ahead.
So Oracle and OpenAI signed a partnership deal where Oracle provides the compute, which means, and we'll get into this, Oracle has to build a cajillion data centers over the next 5 years. The value of the deal was, wait for it, $300 billion with the pinky right there. And immediately Oracle stock skyrocketed.
Yeah.
It had already been on the rise because of their cloud business and just went through the roof. But it has a very interesting knock-on questions on the trends in the industry, bifurcation between infrastructure providers and application providers, model providers. So let's get into it. Where do you want to go from there?
All right. Alexi, what's your take?
I have a non-positive take, let's put it that way. The finance take is very, we struggle here. OpenAI is going to make $12 billion in revenue this year. Not earnings, revenue. And they've just promised to spend $300 billion over 5 years on compute, which, if my kindergarten math is correct, is $60 billion a year, which is 5x their revenue today. Per year. The number one question on our investment team was whether or not we should short Oracle stock on this news because this revenue won't happen for them.
Okay, it's paper.
It does have
ghost revenue.
I was going to double click on that. It has risk written all over it. But my question is, maybe Alexi, you maybe have studied the deal a little bit more. A lot of people are talking about Oracle taking on all this risk. But do you think OpenAI just has like no strings attached? It's just I'll show up and if I have the revenue, I'm going to buy it from you? Or do you know?
Well, this is the interesting thing. They didn't disclose enough detail to be able to judge. So they said that they are booking future revenue and then they've entered into contracts. What the details of those contracts?
Oracle's booking future.
Oracle said that they've entered into contracts for someone buying $300 billion worth of compute. And of course, then they said it's OpenAI. So I'm sure that Oracle was not stupid enough to write it in a way that they have to build it whether or not someone pays for it. I'm sure that they will build as the money comes. And that's why I think the stock will come down at some point because the euphoria is justified if this happens.
Yeah, it's a lot of ifs. Yeah. If the data centers get built in time, if the demand is there, if it's productized, if it's monetized, oh my gosh, that's so many ifs.
I have no question about it being built in time if they decide to build it.
Really?
The question is, does OpenAI have the money? Because I think the latest valuation is $500 billion, right?
Yeah.
So
$500 billion.
they would have to raise and they're burning something like 100 billion cash a year right now. So, arguably 60 billion is not the end of it, but like, do they have 5 years worth of runway of burning that much cash? I mean, those are crazy numbers, as any founder will tell you. I just don't know if it's feasible. I think Oracle will be protected legally, but I just don't know if that revenue will come through.
Yeah. So, okay, wait, by the numbers, 12 billion of revenue a year. They have fundraised over 60 billion total, and the most recent one is 40 billion in March of this year. And so it's not even like, I mean, of course they don't have $300 billion dollars worth of cash, nor do they have a plan. I don't think they can fundraise it at all. So why would OpenAI do this?
Well, the case that you would is that they're swinging big time.
Are they trying to scare people out of the game?
Well, if you look at Google, I mean, if you kind of say, I'm going to take on Google, and I'm going to take, you do that. I mean, this is not what OpenAI would have done top down, right? Obviously at this scale, but we can't do it bottoms up. But if you just look at the Google numbers in general, and then you say you're OpenAI, I want to grab 20% of that in the next 5 years. It's not hard to make the numbers work on that sort of thinking, but that's so much productization, so much market penetration, so much take up. I mean, you have to build the application layer, you have to build the monetization layer, and then you have to get it out there and off of Google. That's big. I mean, that's very big. So
and you have to make sure that Perplexity or Anthropic doesn't do it.
Other people think about this problem too.
And I think if you're OpenAI, you're in this situation where you have to commit to this in some ways, right? Because you need to make sure that the downstream kind of building blocks are there for you. Because you need the compute, you need your models to scale, you need to continue to you're already on this very fast treadmill that is ever accelerating. So in order to keep up, you need to kind of place this bet. What you can't have happen is a slowdown in your ability to develop these next-gen models, deploy these next-gen models, productize these next-gen models, finance the outcomes related to the next-gen models.
You can't be infrastructure constrained.
You can't be infrastructure or energy constrained, right? So you're already on this very fast clip, and that's the game you signed up for. So you're in some ways just protecting your downstream.
Yeah. I also wonder if there's
a money may be available. Sorry to interrupt, Peter, but the money may be available because I don't know if this is rumor or this is in flight already, but Masayoshi Son from Japan is rumored to be circling with a couple of $100 billion, just like he did for WeWork with just an extra zero.
Exactly.
It's
a bit of hit or miss track record there.
And this was the original Stargate ensemble, right?
Yeah,
it was.
It was.
Exactly.
Yeah. I mean, there is another angle. I don't know, Prashant, if you're experiencing this, but we surely are in our business. The cost of compute is not insubstantial. We have a lot of potential use cases that would enhance the customer experience that we offer, but we don't because the compute cost on a marginal use case is just not worth it. So we're allocating our compute dollars, if you will, to very high core use cases, but the product teams have a gajillion use cases lined up. And so I wonder if there is a world where OpenAI is saying, I'm going to just go for it. I'm going to drive down the cost of compute because of scale. And if I can get to the scale advantage on the price, I'm just going to suck in all the demand.
Yeah. And I'll tell you, I think another very parallel example is I've been doing the rounds of a few VCs who've kind of heavily invested in these AI companies and all these. We've talked about a lot of these runaway AI companies that are like $50 million in ARR within 3 months or $200 million of ARR within a year. And my question to these VCs is, well, then why are you investing? Like they should be good to go, right? They found product market fit. They've got AI and like small scale application. But almost every one of these companies is gross margin negative.
Gross margin negative,
which means even at $200 million of revenue, most of that revenue is going straight to OpenAI, which means it's going straight to the underlying kind of infrastructure provider or the energy provider.
That is fascinating.
Right? So everyone's bet in this value chain is that there's efficiency to be had at the level below, which will then make their business profitable. So OpenAI is thinking at some point the infrastructure that powers their models becomes lower cost. And the infrastructure provider is thinking the cost of the silicon and the energy comes down. So, and that will translate and actually make this entire value chain work. But otherwise, like we're all saying, okay, well, effectively these applications that are being built are just wrappers on top of what the underlying LLM can output. And what the LLM is saying is, okay, well, I'm just going to brute force my way into the compute and the infrastructure. And what those guys are doing is like saying, okay, we're going to just make the energy work harder. And at some point, that'll all get subsidized.
Does that work? Do you think that's going to work?
This is the high stakes game we're playing.
This is a huge.
This is the high stakes game we're playing.
The way Google and YouTube, the way Google and YouTube got built, I mean, it was far slower than this. I mean, it's way slower than this. It took over a decade, right? So this is big bets, big bets.
The non-AI, non-tech example of this is actually Tesla. Do you remember when there were no superchargers anywhere in the US?
Yeah.
Yes.
And Tesla said, you know what, we're just gonna eat this. The only way our industry survives is if this happens, if these things exist. And then they started selling their charging capacity once they built it to third parties. Right. So another potential play, if I wanted to look for the positive ways, what might Sam Altman be thinking is, you know what, I'm going to spend $300 billion on compute. If I only end up needing 150, 200, there is Facebook, there is Apple, there is Microsoft. There's Google, there's all the Saudi ones and the UAE ones and anyone else in the world who might want that compute, and I can just rent it to them until I grow into it.
Yeah. I wonder if Oracle's thinking the exact same thing.
Yeah.
Right?
Like it won't go to waste.
Like, because Oracle will be the control point for it, right? So,
now they need it to run TikTok.
That's possible. Actually, that's not a crazy thought, right? So somebody's got to do it. So,
all right, Peter, do you want to wrap us up on this one with the poem?
Oh, we're going for the poem right away.
I think we should do it now.
Okay. Disclaimer on this poem because it is OpenAI related. OpenAI assisted me on this poem, so I'm giving the full disclosure.
The agent is complete.
Exactly. There once was a cloud giant bold whose servers were rumored pure gold. With OpenAI's might, they signed overnight a pact worth 300 bill told. Now, Oracle builds racks on racks while OpenAI trains giant stacks. If the power holds true and the revenue grew, they'll both ride the AI wave on tracks. There we go.
Well played.
Nicely done. Okay. Next headline, still on OpenAI, cannot get away from them. OpenAI purchases StatSig, which in an all-stock deal at $101.1 billion.
Although it could be.
Yeah, exactly. The numbers and the decimal points
the
and the
biggest
B's and the
hire
exactly. Prashant, I mean, I know you are friends with the founder at StatSig. What's your take on this?
Yeah, so Vijay Raji, who's a good friend of mine we both started at Microsoft together. So back in the day, we would spend our weekends together coding. So it was good times.
That sounds fun.
So he's done very well. One of the more respected tech entrepreneurs in the Valley, and he sits out of Seattle. So first of all, what does StatSig do? It's basically feature flag or A/B testing or multivariate testing, experimental, product experiment platform, right? And when this news came out, I was pondering like, what is this? What does this have to do with that, right? Or what does OpenAI have to do with StatSig? But I think again, if we're all in and saying the big bets are on OpenAI and everything else we just discussed. For OpenAI, the biggest challenges are going to be around how quickly and how effectively they can deploy these next-gen models in a safe way, right?
Yeah.
How can they effectively not just roll out these models quickly in this model deployment race as people look to adopt various models, but how can they do it in a safe way? And we've already heard all the stories around hallucinations and model safety, et cetera. So I think that's one area where some of this an area where StatSig could potentially help. The other one is I think we're also going to go from OpenAI just being a model developer and a base interface to perhaps an application developer, right?
Yeah.
So we talked about how the value in these companies over time get captured at first at the infrastructure level, then at the model platformization level, and then at the application level. So in some ways, they need to build this muscle around application deployment. And I think what they will do is, again, they will use the ability to smartly feature gate to bring you new applications that run on their models. And it won't be for everyone. It'll be for guys who are very well dressed or have cufflinks or ladies
squares.
in jean jackets or more in one or more serious tone, like people's usage patterns, right? So they may also classify premium users or non-premium users in a different way. So I think as they enter this next phase of OpenAI, I think StatSig could play a fundamentally bigger role. And look, while the early integration and a lot of this is also the acquisition of the team may be focused on StatSig's existing capabilities, that doesn't preclude OpenAI into building out applications on their stack. And I think that becomes very, very powerful. I don't necessarily think StatSig fundamentally changes like how the models kind of resource, compute, etc. I don't think that gating, which we've talked about in the past, would be part of the remit. But I think the applications definitely, absolutely, and what features they roll out on OpenAI.
Yeah, the thing that struck me is between these first two headlines, it's like OpenAI, foundational model LLM. With the Oracle deal, feels like it's reaching downwards towards the infrastructure level, and with the StatSig acquisition, feels like it's reaching upwards towards the application level. So they're clearly just trying to expand across the different parts of the supply chain that they're working in.
Own all things AI, right? Own stack.
Right.
Or they made a clear statement. They're not going to do the infrastructure. They want somebody else.
Right.
But they're back to the numbers we were talking about. They're betting big on monetization.
Yeah.
And they cannot monetize just on the base layer alone at that scale.
Yeah.
Without a lot of product development, and that's where StatSig comes in.
Yeah, cool.
I would also say I took a big takeaway from this. So Databricks, Glean, StatSig, these are all products I heard about for the very first time from my AI team because they were using them. So now I'm just going to sweep all the tools my AI team is using, and I'm just going to go on the secondary market and I'm just going to buy everything that my team is using, right? So which I don't think would be insider trading, right? I don't think
that's not insider trading.
It would be insightful trading.
Insightful trading, exactly. So yeah, StatSig is a really good tool, and I cannot agree more with Prashant's view on trust. There is big risks increasing as you develop use cases on the application layer, and having good trust underlying each of your products is increasingly critical, not just for OpenAI, for any brand using AI.
Can I give you an example on that one? I was just doing for our own company, for Zinc, I was just doing some user research, and I was asking people like how they use OpenAI. A lot of them just upload their bank statement or credit card statement, or worse yet, they're uploading their path reports or their scans, CT scans. I'm like, your name is out there, your address, your patient ID, your EMR number, your I think in some cases you have the credit card number in the PDFs. Yeah. I think people are not thinking through what it means to upload kind of raw data on themselves into these very large language models. And they're hoping and praying, or maybe they don't care, that these models have the ability not to leak their information. But I think I'm also starting to see on the other side how hackers are now hacking the LLM to extract information on people that may have, uploaded very raw data. So I think this is going to be an area where there's going to be a lot of work. And I think because, yes, we've kind of bought into this new age way of kind of compute. So we need the appropriate protections. And maybe StatSig will play a big role in that as well.
Yeah.
The other thing that I thought was cool about the story is that StatSig also just raised a big round of funding in May, so just a few months ago, at this 1.1 billion valuation, and that's obviously what they got acquired for. So it's actually nice coming from this region to see these startups effectively hit their valuation in some way, shape, or form, and then get the exit as well.
It is.
It's just nice.
Yeah.
Okay, let's switch over to Europe. More startup news. My gosh. Mistral
Bonjour.
and ASML are teaming up. So ASML is obviously the very famous Dutch supplier. They have the lockdown on one of the most critical parts of the chip making process, which is the lithography equipment. So they have invested $1.5 billion into Mistral, which is a French AI startup building open source large language models. They basically led the Mistral Series C. It valued the company at $14 billion, and Mistral was only founded in 2023. Which is pretty crazy numbers when you're thinking about it. So I guess the next question, maybe Alexei jump in on this one, is like, what do you think will come out of this deal? What do you think ASML is trying to get out of this deal? And does it make sense from your perspective?
It does, but again, not necessarily for economic reasons. It makes sense for geopolitical reasons.
Okay.
Right? If you think about the world as three spheres of influence, US, Europe, and Asia, over the last 15 years, what's happened is, there's a big saying, US innovates, China builds, Europe regulates. Right? That's what's been happening for the last decade plus. And there are only a few areas of innovation that Europe has really mastered, right? Planes is one. Trains was another one until recently. And now China, of course,
Not looking
can
so
do all
good.
the
They're going after planes too.
They are indeed, but that'll take a bit longer. But Airbus, if you think about what Airbus was, it was a tiny little French helicopter company long ago. And Europe basically said, we cannot completely depend on one company in a foreign country. We will pool our resources and we will make a continental champion. And in fact, airplanes is the only industry they did this in. Everywhere else, they kept it national and therefore too small, because 40 countries equals too small.
Yeah.
Versus US versus China, right? So this is, I think, the start, and actually this is a thesis we have in our firm, this is the start of Europe behaving continentally. So does it make sense for a company that doesn't make chips and doesn't build data centers to have a stake in an AI company? No. Does it make sense for two European behemoths to support each other and to start to build out an ecosystem that hopefully builds on itself to create many more unicorns in the AI space in Europe? But not only does it make sense, I think it's a national security issue, probably for many of them.
Does anybody else find the irony that the land of the Balkans is leading into balkanization? I just find that very ironic.
Are we giving them way too much credit? I mean, first of all, it's like a small, relatively speaking, it's a small investment, right? It's not like they've not taken a majority position or anything. It's like a small investment, relatively speaking. And did they really think this through that far ahead into the future and saying, hey, yes, we're in lithography, but we're going to go and own an AI model developer? And
opposite end of the value chain.
Yeah, I can see like they kind of like went slightly more adjacent and said, okay, what's our next adjacency and the one after? But they've gone all the way to the other end of the spectrum. I'm wondering if this was just a really fun golf game that was played, and a deal was struck saying, hey, I'm looking to raise money, and hey, I got a ton of cash flows. Let's pool it together.
I think that's spot on, Prashant, because think about, big US tech companies, big Chinese tech companies, they all have venture arms through which they grow.
Yeah.
Europe doesn't.
Yeah.
So I wouldn't be surprised at all if ASML a few months ago decided, you know what? Let's put aside this amount of cash. Let's start doing this. And someone said, keep it in Europe.
Yeah.
That I can believe.
Yeah.
That I can believe. I can believe that far more than, hey, there was this confederation that came together and said, hey, we need to support Europe as a whole.
I think it was very Venn diagrammy, which is like, I am looking for something in the AI space, and it must be European, and it must be like, and it's like, oh,
and they
Mistral.
used OpenAI, and they got a chat. They got a
And I can't
hit of
afford
one.
anyone in America because they're all too expensive at this point.
That's true.
Fair.
Yeah. I wonder if that was more the play.
Yeah.
But yeah, I think it's good to see this. I think it'd be good to see a AI ecosystem kind of come up in the major cities of Europe. I do think Europe tends to play by its own rules when it comes to, data protection, privacy, customer protection, and I think they could be a gold standard in terms of AI. I do think sometimes the US does play a little bit fast and loose, and I think the trust deficit on the rest of the planet, continues to exist. But I think Europe could actually emerge as the safe, trusted kind of ecosystem that one could subscribe
Like
to.
a third player.
A third player. And I think it would be
I
great
think
to
that's
see.
the goal.
Yeah. That would be good to see. I just want this to play out that way.
Yeah.
Yeah, and Prashant, I think you're probably right. Like, is there, did someone plan 20 steps ahead? Probably not. But is this the rhetoric in Europe that they should be thinking this way?
Yeah.
Probably at this point, because otherwise they're being squeezed on both sides.
I agree. And they're probably like, hey, we can't miss this one. And this is going to
Yeah.
impact all of us in a very meaningful. So what I also read was like they were going to now use Mistral to improve their operations.
That sounded
etc.
like PR fluff to me.
Yeah, that sounded like exactly. That's where I was like, man,
right.
come on, this seems like a.
I'm like, you need LLMs to help support your lithography equipment making. I'm like, I don't.
I
really
think that was
see it.
really a long stretch from
Yeah.
home. So
Yeah.
I felt that was.
So far away, you have to take out the binoculars to see the other side of the value chain.
Yeah.
So yeah, I didn't buy that one.
But from a consumer perspective, obviously Europe is also an incredibly important market, and then
Yeah.
given the stringent regulations there, it's like maybe that is the way that the local player has like a proper leg up in
Yeah.
order to go capture what is probably the second largest market. Like, yeah,
I wouldn't
in
be
the world,
betting
right?
on them turning into OpenAI anytime soon, just
Yeah.
quietly.
Not without the support of
Yeah,
regulations and some. Yeah.
Even with that,
Yeah.
go for it.
Okay, so then this all brings us to with the big numbers and the B's that have been tossed around.
$1 billion.
Is there an AI bubble? More recently, Sam Altman, Brett Taylor from OpenAI have been saying that we're probably at the peak of the hype cycle. Jerome Powell, the Fed chair, said that there was unusually large amounts of economic activity in the AI space.
He's always so exciting.
Yeah, I probably should have done it in my best Jerome Powell impression. Next time.
Fed speak.
Yeah, exactly. So, I mean, what do y'all think? Is there an AI bubble? Should we define what a bubble is? Is it a technology bubble? Is it a financial bubble? Does it matter if you're for any like day-to-day investment decisions and actions?
Of course it's a bubble. Of course
Yes,
it's a bubble.
bubble with a B. Got it.
Of course it's a bubble. I mean, of course, right? Just and all the bubble issues apply. Like, first of all, I just had to pull up a few quotes. This is not a bubble. It's a new paradigm. The 4 most dangerous words in investing are, this time it's different. I could go on, but those are quotes from the .com era.
Yeah.
Right? Yeah, of course it's a bubble, right? So there's just so much uncertainty, there's so much risk, and people are taking huge bets, and then there's lots of enthusiasm behind the bets, and then retail investors get involved in some things like OpenAI, and it just goes crazy. So, yeah, it's a bubble.
Okay.
But off the back end of it, things will change a lot. Just because it's a bubble doesn't mean it's not a paradigm shift.
Yeah.
Exactly. And I think when we think bubble, we're like, oh, run for the hills, right? Like, so actually that's not true. Like every time we've had a fundamental change in humanity, I think there was probably a bubble. It was in the now
like the tulips.
we settled to a new norm. The internet was a bubble, and we all went through it. Many of the companies that were born in that era died in that era, but then only to come back later, right? So I still remember when I first moved to the Bay Area, we had this thing called web vans, and they were it, and everyone was like, man, this company is just going to IPO, it's going to be a big deal, and then it went out of business. And then you kind of fast forward 10 years,
Yeah, that's right.
and you get like Instacart or you get DoorDash, and a lot of the things that web van was trying to do. The customers perhaps weren't ready, the digital payments weren't quite there, the infrastructure wasn't quite supportive. But 10 years later, all those businesses became possible.
Yeah.
So I also think, but the grounds for innovation were laid during the first bubble.
Yeah.
So similarly, I think, yes, it's a bubble. Yes, people will make money. Yes, people will lose money. But I think fundamentally, as a net whole, I think we'll all be better off. Perhaps.
The other thing I would assert is I have a suspicion that the structural changes that are inevitable will happen faster this go around because you're dealing with companies that already, like myself, like our company, we've got our data in order, we've got infrastructure sorted, like we're jamming on AI, whereas the .com era, it was like mainframe to web. You had to hire people and design things from scratch, and there weren't payments, and there weren't this, and there weren't that. You can light up AI use cases internally and externally really fast now. like really fast. And I
But
think
I would
that'll
also
be-
argue that the use cases we're dealing with now are just optimizations of use cases from the mobile era, right? We're still tinkering on the surface on like, this is how we used to do, in the last year, this is what we used to do. We're just doing it with a little bit more AI help now. I think the AI native use cases are yet to be born. And I think that's what keeps me excited because I think that's the
interesting.
world we're going into.
Yeah.
So I'd say, look, .com era, fiber optic, right? AI era, maybe it's all the Oracle data centers with all the
infrastructure.
silicon, right? But I think if one thing we go into is this whole agentic commerce or agentic payments or agentic like life management, hey, I think that would be pretty darn cool.
agentic life management. Whatever that is, I want that.
I've just been playing around with a few of these therapy apps, AI therapy apps. Phenomenal.
Yeah.
I think, man, in a world where no one wants to listen to you, these things are very patient.
Poor wife.
I love it.
Your own personal therapist.
Is this a call for friendship?
Exactly. What are you
All our
uploading?
listeners, please.
Yeah. Uploading your psych report. Here's
And my
problems.
health and my financial data. Come on, help me out.
The danger in this whole thing is that what if the next iteration of all these models is just much more energy efficient?
Yeah.
Yeah.
And then all of a sudden, all these data centers, you need half of them, like fiber optics, right?
Yeah.
I mean, human beings are very simple. When we see a new thing that we know is real, we don't want to miss out.
Yeah.
And then we all want to find the thing
Yeah.
that will survive. And of course, we build too much, right? So there's no question that there's a bubble. I completely agree with Peter. But I also think it might run a bit longer. If you think about the dot-com parallel, are we in late 97, early 98? Or are we in 99? We might be in 98. The Fed is lowering rates, making it a little bit cheaper to borrow. Even this is bringing it over to the traditional finance boring part of our conversations. But the lending to these data center businesses is it was running off cash from Microsoft and Google and Meta and so on. Now they're starting to slow down because they're getting to 60-70% of their free cash flow spent on this. So now it's lending. It's private lenders giving money to companies to build data centers. And that's going to become cheaper as the Fed lowers rates a little bit. So you can see this being extended for a bit longer before people go, oh, hey, maybe I don't need quite as much, or I'm more efficient, or the use cases are, to Prashant's point, 7 years away. The real uses, not the optimization use cases, right? The optimization use cases are here now, but they're not 10x type of growth use cases, right? The real new use cases might be a couple of years away. That famous quote, we always overestimate what technology can accomplish in 5 years and underestimate what it can do in 10 or 20.
Yeah.
I think this is it. But between 5 and 10 and 20, you have a lot of disappointed investors, I think.
Yeah.
And that's what a bubble is. It's not that we're not going to get to 10 and 20. It's that in between, someone has to do a performance report and they've got a problem.
Yeah. And I think, look, anytime we lay down these pipes or put down the silicon or create these data centers, yes, we will absolutely get more efficient. These models will get efficient. But that doesn't necessarily mean the data centers still won't get fully utilized. I think we'll also at the same time increase the appetite at which we want to consume the silicon or consume the output. So I think that's my bet. I think we have probably overestimated and underestimated at the same time.
Yeah.
It's just the
Remember
time
the good old
horizon.
days when we were running out of energy due to Bitcoin mining? We were also concerned about that. That's gone.
Well, I was going to say
got
the
dwarfed.
difference is like the dot-com bubble was a financial bubble, but the technology endured.
Correct.
Which is what the AI bubble feels more like versus the crypto bubble where it was a financial bubble and the technology did not endure. Well, as of yet. Like I feel like they're still on that 10 to 20 use case horizon. Although maybe with stable coins and things like that, we'll start to shift a little bit as well. Yeah. All right. So we're in a bubble, but maybe don't sweat it quite yet. And you still got to build.
Enjoy the ride. I wonder if OpenAI is going to be like Webvan. Do you know? Oh, remember ChatGPT? That was so quaint.
Okay, let's switch gears. I want to talk about Alibaba earnings. So they just reported their Q2 numbers. basically the revenue was flat year over year, profit slightly down, but the cloud growth was on fire. I think it's up 26%
Surprise!
year over year. Yeah, exactly. And then I think some of the other things that you saw was that there were headwinds, I think, within the domestic markets, but the international markets were picking up. Alexi, as our resident analyst, I know you always make fun of that title, but you give me a better one. How do you read this?
All wise sage.
I don't know that there are problems domestically, Maria. They've chosen to not give up any more market share to JD, to Meituan, and have said, you know what, we're going to be in this space too. And I actually read it as a vote of confidence from their management that they can afford it now. They really couldn't 2-3 years ago. And that's why, there was an opening by Pinduoduo, by Meituan, by JD, getting into all of their old business lines. And Pinduoduo's business model was, we're going to go where Alibaba isn't getting to yet. And we're going to do the group buying as well to make it even cheaper. So they went to tier 2, tier 3 cities, which was expensive to start. And now Alibaba's basically saying, we're going to be everywhere again. We've got our swagger back. It's no coincidence that all of a sudden Jack Ma is showing up everywhere again, too.
Right. Fully rehabilitated.
Yeah, exactly.
Back from the dead.
This brings a lot of communism and Mao time period of things, which I probably shouldn't say out loud on a podcast. But no, I view it as, we've talked for a long time that the issue with China is that it's 100% dependent on exports, and they are not willing to focus on domestic consumption. This is an example of private sector feeling confident enough to invest in domestic consumption. Of course, they're also all looking at global, but there's a serious money that Alibaba invested, and that's why their earnings took a bit of a hit. And of course, to Peter's point, the cloud revenue, that's as expected as it is everywhere else. Because you're going to have two worlds, at least maybe three, with Europe if Europe gets its act together.
Yeah, Alexi, I have a more macro question for you, just your take from Hong Kong into the mainland. Two ways to read this, putting the cloud stuff aside. One is you just have a great business going, I'm just going to focus on my core. That is the thing I need to do. And I'm a good business, and I know that if I drop the ball on my core, I'm pretty screwed. So I'm just going to double down and do whatever it takes to protect my core. Versus now's a good time to is there any sort of indication, and this is the question, that mainland growth is on the horizon, that consumption is coming or will be about to be blossoming? Is there what is the macro view from you on the mainland?
I think it's more the first one than the second. I think, we're all very disappointed. The Western view on Chinese growth is it's very disappointing at this horrible 3.5 to 4.5 rate, which is higher than almost every country. And certainly if you take the current size times the percentage, it's definitely higher in absolute terms than every country, right? So we're disappointed, but it's not exactly growing slowly. It's certainly an economy that's in transition. And that's what's been difficult because, there's a read on capitalism called creative destruction, right? That is how it works. You have to destroy stuff first, and that's difficult. But I don't get a sense that there is going to be this massive explosion of consumption, because for that, you need a massive recovery in property sector and equity markets. And you are getting the equity market stuff, but off a very low base. Chinese equities are still trading, basically at half the valuations of US ones. But you're not going to get a property bull market anytime soon. So I think they would be very happy with steady as she goes growth. And I wouldn't be surprised if there have been conversations between, senior business leaders and senior government leaders saying that, the government is committed to that steady as she grows support, but they're not going to go overboard like they have in the past. So you can be confident that we've found a floor, but we might not be skyrocketing. We might just be steadily climbing. that's my read of it. And of course, don't forget, the whole premise is China needs to be independent.
Yeah.
So money is going, I don't know if you saw this morning, there was an announcement that some part of the Chinese government is saying you cannot buy NVIDIA chips for AI applications in certain sectors. Now, they don't have yet domestic chips that can replace them, but they will in 2 years now that this edict is out.
Yeah.
Right. So there is this sense of we will persevere, we will succeed in our own way. And maybe, I live too close and I have rose tinted glasses on at this point. But I just think it's good, strong businesses, confident in their cash flow, investing.
All
Got
right.
it. There we go.
Solid vote of confidence there. That's great.
Go for Alibaba.
In China.
All right.
Okay,
What's
let's
next?
go closer to home and talk about the Lightspeed report that just
I've been
came
waiting
out
for
about
this.
the consumer barbell. Okay, so Lightspeed just put out a report a few days ago. They're basically arguing for a consumer barbell strategy here in Southeast Asia. They're saying that, consumers have kind of gotten left behind in recent years as people are going to more enterprise and B2B applications and startups specifically. And so for the consumer barbell, they're kind of pointing out you either have to build products and services for the top 20% of income earners or for the 20 to 80% middle, which to me isn't a barbell mentally, but that's cool. That's a separate issue. But I would love to hear what y'all thought about the report. They are catching some flack for the cheap dopamine thesis at the very end. I don't know if you caught that. But yeah, Peter, you've obviously operated here for many years. What do you think?
I read that. First of all, it was just great to see just how bad the funding winter is. It's really bad. 2025 is running at a $3 billion compared to $25 billion of investments in 2021,
Wow.
and 9 or 10 billion in 2020. It is so cold. So cold outside.
You're talking to the founder here. He knows.
Exactly.
But the early stage is still all right on a relative basis, I'd say. I think the late stage is massively whacked.
Yeah. So,
Well,
all that's just
every
saying
other country besides
there's still
Singapore.
venture, but then once you go to Series B, there's nothing there for you. So, but getting to the barbell part, I read the report, and I to be honest, I don't know who they think they're talking to. Right? I want to know who they think they're talking to because who doesn't know this? If you operate in the region, it's like. Of course.
Go extremely hyper local.
Yeah, exactly.
Stick to the top 20%.
Exactly.
They have the money and the disposable income to afford your stuff.
Indonesia is big.
They're
right?
value seekers.
Yes, exactly.
Give them value. Yeah, all right, keep going.
Then exactly. What he said. Right, so I like,
dude, that was a takedown.
Lightspeed is a really, I have a lot of respect for them. They're a great team. There's some really talented people there, but this one was like, what really is this for? Right? Is this for mass market for my parents to be interested in it? Right? So, a little bit deeper thoughts here, please. Lightspeed, you're better than this.
But the barbell, I think you shared that you didn't quite get the analogy. I didn't get it either. So I'm saying, okay, so you're saying it's one end of the barbell and the rod in the middle, or what are we saying? And not to don't go
a big
too far.
chunky rod in the middle.
Yeah, exactly. The analogy didn't even make sense,
end.
Right? Yeah.
So I think there's a little bit of clarity to be had here.
Yeah. I think it was AI generated, maybe.
I was going to say that, but also I don't live in Southeast Asia, so I'm not as familiar with all the local markets as you guys are. But I don't see that statement being any less true in any country or any region in the world. There was a report that the top 10% of the U.S. population were responsible for 50% of consumption.
Actually, the deal in America increasingly is like the top 3%, right?
Yeah. But isn't this the case everywhere?
Yeah.
And there are companies that cater to the upper end of the market, and there are companies that cater to the mass market.
We if Lightspeed's listening, we do like you guys, right? So it's just these 5 PowerPoint slides that got us all going, right? Because we expect more. We want more from you.
Well, okay. I think the two interesting things. One was the what they did argue specifically, if you compare Southeast Asia to China, is that what is middle class in China is upper 20% here, Right. And so I think what the main argument is that, I mean, Southeast Asia is that obviously further behind. And so when you're building, of course, like the export model from the other countries, like it doesn't really work here because your consumer demographics are all screwed up in relation to what you might otherwise think you're building for. But then I think the macro thing is that last year they did release a report that got a lot of people talking about resetting expectations. And I'm wondering if this year they just felt like they needed to follow back up on it and produce another report, annual report, and they were grasping at straws.
And I think, when we talk about Southeast Asia, we talk about Singapore and the rest of them, right? Like, so when you say Singapore, yes, there's a lot of parallels you can draw. It's Asian, but it's
Asia light.
It's Asia light, or it's Asia, but it's United States. So it could be Texas, right? It could be you could basically hold the same economic principles true for Singapore, but then that doesn't apply to the rest of Southeast Asia. So that point is well made, right? So I think that was their thesis last year. It's like, hey, Singapore is the rest of Southeast Asia doesn't matter, just serve Singapore and you're good, right? Yeah, okay, that's 20%. Like, you're something to that effect. And this year they come back and say, okay, well, if you want to serve Southeast Asia, yes, there's a big opportunity. Yes, there's a lot of people, but stick to the top 20%. And then that's where your opportunity is concentrated. And that's true for India. That's true for Southeast Asia. Because look, those consumers actually behave like consumers anywhere else in the world. And maybe those consumers in the rest of the world are considered middle class, but here they would be considered like high net worth, if you may, or upper mass affluent, if you may. And I think that's the comparison they're trying to draw. And because these people say, hey, look, we want to eat out, we want to travel, we want to be entertained, and
we want education,
we want education, we want healthcare, all that jazz. So I get that. I think this is not for Southeast Asian readers. This is for American readers or American investors in some ways, because for them, maybe it's not as obvious.
Yeah.
Well, if you're an American investor and you don't know this and you're thinking about putting money in Southeast Asia, you got other problems way more than this.
It's just
but
saying,
I think
hey,
you give
it's
your
an
money to
opportunity.
Lightspeed to do it.
Yeah, exactly.
That's the point.
The other thing is like, okay, again, it's the very limited VC capital that's still available here has been predominantly into the enterprise side, and people have left consumer startups behind, primarily because the first time, massive subsidies to try and convert like that middle barbell, whatever group of people, the rod, yes, the rod people. And it didn't work, right? And so when the subsidies stopped, they all left. And so the question is just like, okay, well, then what do we think will change this time? Like, if you go back to subsidies, I mean, you limit the subsidies, but maybe you don't sign up as many people. Like, how do you make it sticky without the subsidies this time? And then second of all, is consumer-backed startups, is that a VC backable business model here?
They do talk about CAC, right?
Right.
So they're saying, hey, look,
consumer acquisition cost.
You can customer acquisition cost. So you can serve the middle bar or the 80th percentile of the middle bar. But you got to be very careful about how you estimate the lifetime value of that customer and how that holds in relation to the CAC. So you can't spend like you would be acquiring someone in the US and hoping to make the same outcomes in this part of the market. So here you have to fundamentally rethink and say, okay, you're going to acquire them for $3, you're going to make $4.5 over the course of 2 years. And by the way, this customer segment is value conscious, wants to be treated well. So you've got to have to deliver the same quality, but you're going to have to deliver it at the right price point. And that's the only way you can make it work. And that seems...
I wonder though,
intuitive.
whenever messages like this get talked about, and you have to focus here because this is the safe place. I'm a bond guy by training, and it was always like, if you lend to this sector,
you're okay.
This is the sector with the most defaults, so don't do it. Well, what ends up happening is that's the sector where you can generate the highest returns because there's no competition. So I wonder, and then this is an open question to you guys because I don't know the region as well as you do. That bottom 80%, if everyone starts targeting the top 20, doesn't that create some sort of opportunity? Due to lack of competition?
I mean, I'm going to get all worked up about this, right? So it's like this magical moment where this magical reveal has been made. There's been great businesses built both for the 20% and the 80%.
Yeah.
Massive businesses across Southeast Asia over the last 20 years. Everybody from Telkomsel, who focuses on everybody, to Grab, who focuses on almost everybody.
One of the authors of this report is a Gojek founder.
Yeah, I mean, so it's like, and if I open my Grab app, it doesn't look like Uber, and it doesn't look like Uber for a reason, right? So just like all of this is about the fundamentals. There's great businesses built. There will be great businesses built. There's 500 million people here. It's hard. There's 8 countries. It's one of the hardest areas to do because of all the different countries that you've got to deal with and regulations and all that kind of stuff. It's hard, but there's great opportunities. And
I have a hyper-local mindset. I think that's the other big point. If you don't have that hyper-local mindset, you're gonna miss the nuances.
We could do a whole episode on the 5 things that you have to get right for Southeast Asia that we've all known for 15 years.
But in fintech, Alexi, to answer your question, at least in India, what I'm seeing is, look, you can offer wealth and luxury and services, insurance, high-end premium insurance, to maybe 10%, 20% of the eligible population. For the rest of them, it very quickly turns into lending, right? And it turns into lending, and you can still make a great business out of it because the next best option for that customer segment is far worse than what your fintech or new age bank is offering. So I do think, it's not predatory. What is truly predatory is to leave them to borrow in kind of mathematics that they don't even understand and the compounding that they don't understand. At least here, you're in a regulated space and you're lending to them. So I think that's what I've seen for the remaining, I'd say the 80% of the barbell, the rod of the barbell. I think that's what I've seen lending work really well.
Yeah.
Unfortunately, what ends up happening is then they borrow and they go into real-time gaming and
I was going to say
some of these other.
I mean, Gcash in the Philippines is under a lot of fire for just basically using their fintech app to gamble. Yeah.
So that's unfortunately where the regulator gets very spooked out, and they don't want that. And so then, unfortunately, like in India, they just shut down real money gaming.
Speaking of dopamine.
Yes, exactly right.
So,
okay, solid session. That is a wrap for episode 16. We're at 1/6 of 60/40. Thanks, Alexi, Prashant, and Peter for all of your insights. You can always submit questions or suggest speakers for us at 6040podcast@techinasia.com, and we will see you in 2 weeks' time. Bye.